What is up, everybody? This is Travis, also known as TI Trading Wiz, coming at you guys with another video. Today I want to break down two trades this morning. One was a loser, one was a winner, $2,400 in total, and break down why I took it and why I exited the position when I did. Now, I'm a big person on like taking profits really quickly. Just something I've always done. It's kind of part of my scalping background. I didn't come from a swing trading background. So I wanted to break down why I think watching order flow is important and why using smart money concepts is also important to do, and show you exactly why I exited the position, how I exited, and how I basically made that choice within about 3 seconds in this trade, and why it's important to monitor your trade. So let's just go ahead and jump right into looking at, first off, the trade. Then we'll go to TradingView, and then we will watch the tick stream. So this is what the trade looked like this morning. We were in a downtrend, but I thought that we were kind of bottoming out here, right? But then I took this long. Once we kind of tried to push higher here and we failed, that made me very nervous. You can see here is where I basically flipped my position. I went and closed it as we started to form this bearish candle. And then here is where QWave actually printed the sell signal. So I closed it before QWave printed the sell signal. So the first trade I lost about $350, and on the second trade I made about $2,800, coming in with like a total profit after fees like $2,453. But let me go over why I took the long in the first place, why I then took the short, and also why I got out when I got out over in TradingView. This is QWave with the Smart Money Concepts overlay from QuantVue. And now you can kind of see that we're overnight kind of just going up and down. Didn't make that much price action, but overall kind of a bullish trend this morning, starting at like roughly like London Open, and see we're kind of going this way, right? So taking a long here was kind of like my idea, and once we failed to kind of continue on that trend, I went ahead and flipped my position pretty much right in the zone. And I did not think that we were going to continue. I didn't think that we were going to continue going up at that point, just because us just kind of failing to break above that trend line. So that's kind of the thought process on why I took this trade around 8:30 and setting my stops not at these recent swing highs, but basically on these trends. So right here, I would basically just put my stop right in the middle, right here, going into, I guess this wasn't market open, but this was 8:30 this morning. And so what ended up happening is we ended up ripping down, ended up catching the short, took a little $300 loss here. And the reason why I sold at the 806 level was, one, because this kind of correlates with yesterday's this like little swing high kind of right here, and then kind of all this chop right here, and then we saw a lot of volume come in at this 806 level kind of towards the end of last day, and this just kind of ripped up from there. So this 806 level was already a level that I was super aware of. And so going into this morning, as soon as we opened, I started looking at the order flow and started seeing orders build up really quickly at this like 805, 806 level, and made that decision to go ahead and close the position within 3 seconds of the 830 candle. From this big dip, right, all the way down here, this is 3 seconds that happened. And I was able to already have an idea that this was probably going to be a level, right? And then just monitor it in the order flow. And this is why teaching order flow, I think, to people off market open, at least, and just times of high volatility is so hard to do, because how do I sit there and explain why I'm looking to take off orders based on order flow that's happening in 3 seconds? And it's just something where once you're watching it, it's very helpful. And so just watch the previous zones that have already been, high levels of pivot points before in the past, you watch those levels on the order flow and you start seeing orders build up, you know that it's potentially going to be a complete reversal, right? Or a little mini pullback. And so this is why I was able to catch this trade. If you look at 806.25, you can see I exited right there before he even ripped back up. And it's kind of it's a perfect, in my opinion, it's kind of like the perfect exit. And so if people are trying to consider, how do you know when to exit, right? Instead of just we're looking at when the Q wave bull and the Q wave bear are flipping signals, right? Look at previous zones and from smart money concepts, and then keep the order flow up. And once you see the order flow start to fluctuate and the orders start to build up, you know that that might be your potential exit position. And the more you look at it, the more you'll start seeing it, even though it can happen super fast. Like this, that can happen within 1-3 seconds. All of a sudden orders can start piling up, especially on the turn of like 5-minute candles, market open, news events. It's really kind of hard to gauge it, but if you can get good at it, you can get really great exits. Now, this continued to rip down. So if I would have stayed in it, I would have been fine. But there, you don't ever know really 8:30, 9:30. It's always hard to kind of tell because big moves like this can completely turn and rip the other way. And so, I would much rather exit my position on a potential order flow area, right, than wait for it to rip through the Q wave. So really quick, I'm going to give a brief overview of a tick stream. Basically, so I do have level 2 volume. We have 3 minutes left in the trading day, so I'm going to try to make this relatively quickly. You can adjust the volume filter here on market open. I like to probably keep this up towards 40. As we don't have that much volume near like the end of the day right now, maybe 20 is kind of a better filter. And then I typically don't go lower than 10. And you can see kind of different colors down here. And so I'm going to break down these colors really quickly. So a green kind of means that there's buyers. If you see black box with green text, this means that there's buyers, but not really going anywhere. Red means that they're sellers and it's moving. We have a black box with red text, and so this is kind of their sellers, but it's not really moving, and there's not enough sellers to kind of like move it. And then the red is that they're sellers and it's moving to continuing to push down. So that's kind of the simple way to explain it, is that that's what these different colors mean. And so once you see, multiple, say, greens come in, say you're on a downward rip like we were this morning, what I was seeing was at that level that I was already looking at, you just saw green box, green box, green box, green box really quickly. That's how I knew that, okay, I need to close the position. The other thing that I keep up is kind of the DOM, right? And you could also see that there was a huge, a lot of a big bar, I guess I could say, or much higher number at that 6 level this morning than there was anywhere else. So that's kind of the simple explanation to how to use both these in conjunctions with each other. So this is a very simplistic breakdown on how to use TickStream for somebody that's never opened up TickStream and Tradivate, how you can use it to your advantage while trading with Q-Wave and smart money concepts. Again, you already have these levels, should be already kind of drawn out on your chart. You should already have an idea of where these levels might be. And then you're just using the tick stream to monitor whether or not it's likely going to pivot when you think it's going to pivot. And if it looks like, you see orders start coming through, you're going to go ahead and get out of the trade. So I know a lot of y'all have DM'd me asking me, how do I get such good exits on my trades? And this is how I'm doing it. Levels that I've already previously marked out, smart money concept levels that I've already previously marked out. So I already have an idea where I should be looking for a pullback or a complete reversal, and then monitoring it in the tick stream on Tradivate. Once you combine those two, it can be extremely powerful in getting really amazing exits. And what's again, great about this is the fact that this is going to help you not hit your trailing drawdown. Again, if you trying to, hold through a pullback like that with a trailing drawdown, that could go against you very quickly, especially if, it pulls back just enough where it makes you nervous and you get out of the trade. And now you have this trailing drawdown that's gone back on you, let's say $1,500. That was probably $1,000 pullback on 2 NQ contracts right there. So the fact that I didn't hold through that pullback and I exited the position right before it pulled back, that is extremely powerful. And hopefully some of y'all will be able to implement this and be able to get good at it and just start crushing your evaluations and getting funded. Once you build up a little bit of a buffer, I say, go ahead, hold through. Again, I trade differently on evaluations and prop accounts that have just got funded, right, than I do a prop account that I've already built up a buffer. Like you're going to trade two different styles. You need to be able to take your profit a little bit earlier, I think. And the other side, once you have a little bit of buffer build up, you can hold through a little bit bigger of a pullback. You can trade a little bit more contracts. So these are all things to keep in mind. And let me know down in the comments if you have any questions about this, if I can make anything more clear, or if there's anything about our system that you want to know. And make sure you guys like, subscribe to the channel, and see you guys in the next video. Bye.